Well, it's the fourth straight quarter of profits for Welspun Corporation. The counter jumped as high as 6% after reporting the September quarter earnings. However, has cooled off now. To discuss the highlights of the quarter gone by, joining us on the show is the Chief Financial Officer, S Krishnan. Mr. Krishnan, if you could listen to me now, what is your, first of all, comment? How do you really see your performance over last quarter?
The performance in Q2 of this financial year has been satisfactory. It's been very good compared to last year's Q2, and the performance across the first half of this year, April to September, when you compare it with last year's first half, also stands out as an exceptional performance. But when we really analyze this performance, we must remember that Welspun is a projects company, and when you look at our numbers, you must look at them, not a quarter-on-quarter basis, but typically it has to be a year or sometimes more than a year, because a projects company like us executes projects which have got a life beyond the financial year of the company. And as we go forward, we will see two things in our performance which you must keep in mind. Is this year the results or the performance has been front-ended to some extent, so we will see some slack in the second half in terms of margins possibly. But as we come to the end of the year and we start the next financial year FY19, we see a significant pickup in the order book, and between now and March we will see the order book getting strengthened because of business coming in largely from the overseas geographies, particularly MENA, Middle East in particular, and also some business coming in from North America and also from India.
Mr. Krishnan, your finance cost for the quarter has gone down. Could you just tell us what's the debt on the books right now? Have you been able to reduce it in terms of compared to June quarter?
Yes, debt reduction has been a mantra that we have been following for several years now, and in these last couple of quarters we have made significant debt reduction. Between March to September 2017, we have prepaid debt, NCDs rather, prepaid over about 1,000 crores of debt. So these have been prepaid largely from the cash accruals and surpluses available with the company, and that has also helped us to bring down the overall interest and finance costs. This also on another level helps improve all the ratios in favor of the company, whether it is at the standalone level or at the consolidated level, and it also strengthens our balance sheet and helps us prepare for the upturn that we expect in this industry in the years ahead.
And can you sustain these margins that you've posted in the September quarter, 9%?
Well, we believe that there could be some slackening in the margins in the subsequent 2 quarters, maybe the second half of this year. It may not be possibly at the same rate, but we must place it before all of you that margins are a function of the orders that we transact in a quarter, and the orders across markets will not be the same from one quarter to another quarter. As we see this year, we believe that the first half has been heavy in terms of performance, particularly at the bottom line. But we believe there could be some slackening of margins as we go into the second half of this year.
All right, Mr. Krishnan, we'll leave it at that now. Thanks a lot for joining us and taking us through your September quarter earnings. That's the management of Welspun Corp clearly stating that the margins of 9%, which were posted in the September quarter, may not be that sustainable in the coming quarters, and the stock currently is seeing cuts of almost 3%.